Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Monday, May 16th. Firstly to the S&P 500, and here we see a confirmed change of trend today, this current candle forming a higher high and a higher low. A switch in control away from the sellers to the buyers with the formation of this white body candle and the market closing up towards the highs. A switch in net momentum as well away from the sellers to the buyers, and a good answer from the buyers here. Now importantly, the market for the previous day's trading had traded down around that 2040 level, and that has been our benchmark for quite some time over the last month or two. This is the second time in about the last week or so that we've approached this area, and the buyers coming in very strongly off this area suggests that we may now be building for an assault to the top of this highlighted zone of resistance. The top of this zone is around that 2079 level, and if the market can break out through the top of there with some follow through, we could eventually see the market testing back up to the 2100 level. Importantly, if you look at this market in bigger picture terms, we've had uptrending price activity. We've now got sideways congestion activity, and this is looking something like a potential head and shoulders pattern. And if we look here, we can draw a neckline through this region, this area between the head. But it's a very complex head and shoulders pattern. We have this left shoulder, a head, and a right shoulder that may be forming at the moment, but it's a very complex left shoulder and a complex right shoulder. Now, we don't have completion of the pattern until the market closes below the neckline. Problem here being, and this is why this may not end up being a good pattern for us to trade, is that the minute that we break out through the neckline to the downside, and if we do close through the neckline, we're going to be interacting with the Ichimoku cloud. And the cloud has very strong potential to act as support. And it extends all the way from 2035 down to about the 1940 level, roughly at the moment. It does make any potential target for the pattern very unreliable because we could find anywhere within the cloud as support. Now, with the market bouncing off this area and the buyers building some solid upside momentum, as I've mentioned, there is a good opportunity here for the market to trade higher up to this 2079 level. But we also have some potentially strong resistance to come into this market just below there at the Kijun-sen indicator, roughly about 2075. So we do need to watch that area very closely. In terms of trending price action, still above the cloud, so a bull market continuing in the longer term time frame. Looking at the Chica span, it's just moved back above the price action, the corresponding price action, only slightly. So we're starting to get some support once again for this longer time frame uptrend, only minor though, so suggesting that there is some mild minor momentum to the upside now returning to the market, whereas the market was quite neutral in terms of momentum previously by being within the price action. In terms of the medium-term time frame, we are still trading down below the Kijun-sen, so a bear market only just in the medium-term time frame. But in the short-term time frame, moving above, then below, then above and below, and now just slightly above the Tenkan-sen, really does highlight the indecision in the short-term time frame, that we're moving very quickly from a bear market to a bull market to a bear market in rapid order now, and this is suggesting that there is a possibility of this market potentially starting to transition from this stronger uptrending phase that we saw previously into a downtrending phase. But obviously we won't have any definitive long-term downtrend until the market breaches down through the Ichimoku cloud, and it is very, very deep at the moment and will continue to be so for the next couple of weeks. After that, the cloud does move higher, and there may be an opportunity here after the next couple of weeks, so into about a month's time. Now, just looking to our bands, and as you recall, we were looking at the market potentially transitioning into a downtrending phase. Clearly, that very strong tone to the uptrend has ended, and the market has broken out for the previous day's trading. If you recall, we want to see strong follow through as confirmation. So we want to see a strong bear candle and the market taking out these swing lows, and we haven't done that. So we still have to wait. And very often this is how the markets do transition. They don't just normally develop into strong downtrending markets after an uptrending market. So we have this period of sideways activity. Importantly, we're now trading within the band, so rather neutral, but we do need to watch the middle of the bands as potential resistance around 2073. And if we do trade through there, watching the upper band to hold as resistance at 2091.